Let's talk about the 4-year halving cycle. You and the reflexivity research team did this huge deep dive on the 4-year halving cycles. What did you find out?
Yeah, for sure. I think there's a couple points that we can kind of break down. The first one, we kind of segmented the report out into a few different subtopics. We looked at kind of macroeconomic factors, some of the Bitcoin native factors, and then what I called kind of behavioral dynamics, and then kind of touched on miners briefly as well. First, when we think about what is the 4-year cycle, for anyone that's been in the digital asset space for a prolonged period of time, is very familiar with this concept of the 4-year cycle. But for anyone who isn't, oftentimes you'll hear crypto market commentators or market participants ask you, how many cycles have you been around for? And this is referring to what's at least historically taken place as this kind of 4-year cycle that revolves around Bitcoin's supply halving. And so the supply halving is when Bitcoin supply issuance gets cut in half. The first one was in 2012, then 2016, May of 2020, and then the upcoming supply halving will be sometime in late Q1, early Q2 of 2024. And so historically, what this has indicated is that when you have kind of this imbalance of supply and demand, you have a decline in the amount of new supply coming onto the market. Even if demand stays the same, you should theoretically have an upwards drift in price. And so we included a chart in the report basically showing the 90-day change in issuance relative to the trailing trend of issuance to show kind of that supply, quote unquote, supply shock. But when you compare that to the overall circulating supply, you see that halving effect actually diminishes over time. So a way to think of this, I don't take baths anymore. I don't think I've taken a bath since I was 5 years old. If you're sitting in a bath and you press your hand down on the bath water, create a massive ripple throughout the entire bath. If you were to apply that same pressure in a lake, it's not really the ripple's not gonna go far. And if you were to apply that same force in the ocean, it's not gonna do anything. So, my point in how to bring that into applying that to the supply halvings is that you're applying the same quote unquote supply shock or impulse, but the overall pool of circulating supply is larger over time, and therefore there's a diminishing effect of the supply halving on the overall market. And so that in itself, in terms of driving the cyclicality of Bitcoin, has had a diminishing effect. When we look at some of the kind of behavioral dynamics, there's a couple things that we looked at. The primary piece of information that we looked at was this idea of gauging profitability, which we used to gauge through on-chain metrics, which are essentially looking at Bitcoin's economics. And so we can look at things like how much unrealized or also realized profit or loss the market is in. What I mean by that is we can look at the last time that all coins moved on chain, look at the current marginal trading price that Bitcoin's trading at, and compare the two. So we can see, is the market in a state of a massive amount of unrealized profit? If that's the case, there's a large likelihood that those individuals are going to look to realize some of that profit. Conversely, when we're in the bear market, there's a large amount of realized losses, especially if we adjust it for market cap to get a kind of relative view to historical bear markets. We can see that, okay, there's a large amount of capitulation. Capitulation is a kind of behavior that historically marks the bottom of cycles in all markets, including Bitcoin. So that's one of the most important pieces of information. We included a couple different data points, including SOPR, net unrealized profit loss, realized profit loss, all in the report. And then we also talked about the concept of miners. So we briefly touched on them when we mentioned transactional activity. Miners have a diminishing effect on the overall market over time. Part of that is because of the supply issuance. So miner revenue as a percentage of overall circulating supply continues to decline. And also when we look at miner balances as a percentage of overall circulating supply, that continues to decline as well. So therefore, they have a diminishing effect on the overall implications for Bitcoin's price action. And then the last piece that we looked at, again, was the macroeconomic factors. Try to keep the piece relatively Bitcoin-centric, but I picked kind of two data points that were worth looking at. One is ISM. And so what we're looking at here is essentially a survey of all manufacturing economic pieces of information. Bitcoin has historically had a very high correlation to ISM. We have these very brief periods of kind of decorrelation. We saw this, I believe, in 2012, late 2018, before the 2019 run-up. And recently, we've kind of seen this decoupling of continued decline in ISM while Bitcoin's continued to tick up over the last few months. What does that indicate? The reason for those kind of decoupling or periods of divergences is because whenever you have a sharp economic decline, the Fed steps in with liquidity to kind of counteract that economic decline. And so I think it's kind of a reflection of the sentiment of market participants in terms of thinking that we've kind of reached max hawkishness, for lack of a better term, with monetary policy. And people, being forward-looking in the market are viewing Bitcoin as kind of a gauge for that kind of pivot in monetary policy over the next 8-12 months. And then the other macroeconomic metric that we included was the DXY, which is the dollar index. So it looks at the dollar measured against other major fiat currencies. Specifically in the piece, we looked at the year-over-year change. So what's the measure of the DXY today relative to what it was a year ago today? And we can see that Bitcoin is historically traded, again, with a very high correlation to this. And as you'll see in the report, the year-over-year change in the DXY continues to decline, which, if that trend continues, should be a positive thing for BTC.
What is your expectation with what will happen during the next Bitcoin halving?
It's a very interesting question. I think it depends what kind of time frame you're talking about. I think locally you need to kind of watch how people are positioned heading into the halving. I think this is something that we mentioned on a previous episode that we've done on the halving, but I think it's important in markets to understand it's not always about the outright quote unquote bullishness or bearishness of an event. It's how bullish or how bearish or how positive or how negative is this event relative to the market's expectations. So you could have a very positive event, but if it's not as positive as the market's expecting it to be, you could actually see a negative reaction from the market because they're over-positioned too positively. So I think that's something that I would watch heading into the halving. This is something that took place at the beginning of 2020. We saw in the derivatives data that we saw things like funding rates absolutely jacked, like 200% APR heading into the halving. So essentially, everyone was getting leverage long, expecting or kind of front running the positive price appreciation after following the halving, and then they got wiped out after the COVID crash. That's something that I would watch for kind of locally. But I think from a narrative perspective alone, it's very interesting. You kind of got a stark contrast, and you very eloquently described this on CNBC last night. Of you've got people debating, what this group of individuals is going to do with monetary policy, and there's a large degree of Jerome Powell basically trying to go on a campaign to reclaim his credibility after calling inflation transitory, at the end of 2020 into 2021, and now it appears that he's kind of overshooting to the downside with tightening monetary policy. At the same time, we've got a programmatic monetary policy with Bitcoin. We know exactly what the supply issuance of BTC is going to be whenever the halving takes place, at the end of Q1, early Q2 of next year. So I think from a narrative kind of perspective alone, it's a really interesting kind of contrast. If you've got all these banks blowing up, meanwhile, Bitcoin, although we have price volatility, Bitcoin really is certainty and stability in an uncertain world because of the fact that it's completely driven by code and not human decisions, which are bound to make mistakes with monetary policy.